In this video, I'll be going over the most manipulated move smart money created. It's called our inducement, and it tricks a lot of traders. Stay tuned because I'll be going over what is an inducement, how to identify the inducement, and also live chart examples on how I execute the inducement. Who am I? I'm Wendell, aka Spektrades. I'm a full-time day trader with 6+ years of experience in swing trading, day trading, and scalping GBP/USD Forex and NASDAQ futures. I was just like you. I spent years mastering countless strategies until I discovered ICT and SMC, which changed everything for me, allowing me to quit my job and mentoring over 30,000+ students. And now I'm here to share the wisdom and the knowledge the Most High has blessed me with. Take this seriously. Make sure you guys are taking notes also. And without further ado, let's get straight into this video. What is an inducement? It is the setup before the real setup. An inducement is engineered liquidity created by smart money before price hits a real point of interest. It tempts retail traders to enter way too early. It only forms at weak levels like trend lines, equal highs/equal lows, or minor support and resistance levels. These entries generate stop loss liquidity for institutions to drive price through before reversing lower or higher depending on the trend. Let's go over this simple schematic right here, right? Let's go over this sell model. We see price rally higher and clear this relative equal high right here and push down lower and give us a market structure shift. After this shift right here, we see a pullback. This first pullback is what we call a inducement right here. Price is trying to induce traders into placing their trades at this first point of interest. And then we see price push down lower and give us a second body breakup structure. A lot of retail traders that just get into smart money, guess what they do? They place their trades right at this inducement level right here. Right at this, it's either going to be a fair value gap or a order block. And then their stop loss at the prior old high. Then we see that price rallies higher, clears this inducement, tap inside of this order block right here, the real, right, the real zone, the real setup, to then extend lower. So this inducement right here is just like a trap, right? Because a lot of people, right, a lot of people are just getting into smart money and they don't understand how the setups look like. They don't understand what is the point of interest. They don't understand a lot. So if they see an order block right here in an old high, they're just gonna place their trade right here. And in reality, price is gonna come up, clear them out, boom, come down lower. Let's get right here. The key to inducement. Price will always almost reach a higher time frame zone, such as a OB, a fair value gap, or a OTE level. I have videos on all three of these concepts. So go through my channel and go through these videos right here. I have videos on order blocks, fair value gaps, or the OTE. Learn these concepts. Make sure you learning all these concepts. I break it down all simple, right? But first, it forms a clean structure traps, right? Such as a fake breakout, or a double bottom, or a double top. This right here, this trap then gets violated, creating liquidity. Then price reverses from the true level, right? As you can see right here, this is the inducement. This is the trap. After price clears it and tap inside of our real level, right? Our real order block or fair value gap or your OTE level, then you see this clean reversal right here. The inducement is basically the bait that feeds for the real entry, right? It provides the liquidity for the true entry. So think about it like this, right? If you go fishing, you need a bait to get the fishes, right? So you use a fake fish, right? A fake plastic fish or a worm or something like that, and you throw it in the water, then you reel in the real fish. So this right here, the inducement, is the bait right here that reels in the true fish, right? So smart money uses this inducement to reel in a lot of people. Guess what? They place their stop losses above the old high, then it drives higher, takes your stop loss, takes you out, and then tap inside of the real order block. He grabs the real fish to then go lower right here. This right here is what is an inducement. It is the same thing for a buy format right here, right? We see price give us this relative equal lows, price push down lower, clears these lows, push up higher, give us a market structure shift. After this shift right here, price pull back, give us another inducement low in form of an order block, a fair value gap, or just a certain OTE level. Then push down lower, clear that level, tap inside of that real zone, right? The real zone that is going to be near this inducement to then extend higher. But this right here is just the simple definition of an inducement. Let's get into how to identify inducement in real time. Let's go through this step-by-step process right here. The first step is to find your higher time frame point of interest or level, right? We always start from the higher time frames and we go down to the lower time frames. We never just scale down to the 5 minutes or 3 minutes. You have to do a top-down analysis, right? So make sure you watch my video on top-down analysis. I have multiple videos on top-down analysis. So go through my channel. You're gonna see them. It's called top-down analysis. It's go through step by step from the 4 hour, from really the daily, the 4 hour, the 1 hour, the 15, until you find your entry, right? So make sure you find your higher time frame levels, the higher time frame point of interest. It's either gonna be on the 4 hour or the 1 hour, right? Number 2 is price begin pushing toward that zone. So that's the second step right here. So once price starts pushing toward your zone, that right there is gonna start forming the inducement. And then for step 3 is a clean low or high form right before the zone. Example, you're either gonna see like a micro demand or supply, or a support and resistance level, or just a small order block, right? That may be the real move. But in reality, that's our inducement. And then for step 4 is that lower time frame traders, they enter off that minor level. This right here is our inducement. And then we see that price runs those early entries, those stop losses, and taps into the true higher time frame zone. And then that's when we scale down to the lower time frames after a market structure shift. That right there is when smart money enters. Let's go over this schematic right here. We see price push down lower and clear this inducement low right here. We have one inducement low and tap inside of our order block to then extend higher and give us a full body breakup structure of this old low right here. This right here is a setup, right? This is just a setup, not a full top-down analysis. This is just a setup of how it looks like on the lower time frames. So after price gives us this breakup structure right here, on the pullback, right, price left this bullish engulfing order block. A lot of traders, they see this right here as a inducement, right? This is our inducement because it rallies higher and give us a full body breakup structure. So a lot of people, they don't think that price is going to come back lower to clear this old low right here. But in reality, you see price push down, clear this bait, right? This bait, because it's a bait, to then tap inside of the real order block that is near this inducement. Then you get this clean delivery right here, right? In the video, I'm going to show you exactly how we can minimize even lower to see even the better entries right here, right? The best entry on the lower time frames, right? But this is just a higher time frame view of it. So you see that price left this inducement right here to then push down lower, clear that inducement, tap inside of your order block to then extend higher. This right here is how smart money uses inducement to trap traders. Let's go over some common signs you're seeing your inducement. The first level gets front run or swept cleanly. As you can see right here, this level right here goes lower, it gives us a liquidity sweep and then rallies higher. But there's an order block right near it, right? And it hasn't been touched yet. This right here is sign that this order block is our inducement, because why didn't price come lower and mitigate this order block? Ask yourself that. Why didn't this level come down and mitigate this order block? Because this is setting up for this order block. It's creating liquidity. So when price pushes down lower and clears this liquidity, taps out of the real zone to then extend higher. For number 2 is volume spikes after the liquidity sweep. Just like I stated here, right? You see that price push down and clear this inducement low, this internal range low right here, to then spike sharply and give us a full body breakup structure. This right here is signaling to a lot of early traders, oh, this is my level. This is my level right here. It gave me a breakup structure. But in reality, what did it do? It pushed down. It's just creating liquidity for the true inducement low right here. We see price push down, tap inside of our true zone to then extend higher. And then last but not least is that you get a market structure break or a breakup structure, right? Whichever one you want to label it, immediately after the inducement run. As you can see right here, after price creates this inducement, like I stated, price rally higher and give us this full body breakup structure of this old high right here. This right here is setting up for our inducement, because a lot of traders, they're thinking that this is now the real dealing range from this old low to this old high right here. But it's just inducing traders, right? You see price push down, clear this old low, tap inside of the real order block to then extend higher to come and clear this old high right here. So this inducement right here is just like a bait, right? It's a bait to trick you to enter too early. Now you're in the trade way too early, and then price push down, take you out, and then it quickly reverses. You're like, man, what the hell going on? When in reality, you just got tricked, right? You just got tricked. But now you understood, right? Now you understood that you were just the inducement for now. You were just liquidity. But now you understand it. You know next time to not get tricked by the inducement, right? Stay tuned Stay tuned for this video right here. I'm gonna go over full examples at the end of this video on just live chart examples of trades that I took with the team, right? On the live trading team. Every single morning I trade live with the team of how I execute this this model live in action. So stay tuned. Let's get into how to trade the inducement like a real sniper, right? The first thing we're gonna go over is to wait for the fake level to form and then for retail to start piling in. You have to let the trade play out, right? You have to let it play out. Don't think you're missing the real move, right? A lot of people, they see this right here and they're thinking this is the real move. This is just the model forming, right? It's the model forming. Let price show you its hand, and then, right, you're gonna play the inducement. So let the fake level form, let the inducement play out. Don't be in a rush to catch you a trade. Just let it play, right? This is where confidence comes from, because you know that price left this inducement right here. You know he's gonna come back lower, clear this inducement, tap inside of the real zone to then extend higher. You know this stuff because now you're letting the model play, right? You're not in a rush, right? You're just waiting patiently, letting it play out, and then you executing. So number two is that you mark out the clean high and low created before the point of interest, right? You see that price give us this dealing range from this old low to this old high right here. This is the true range right here from this old low right here, if my cursor can go down, and this old high right here. And everything inside of this range is what we call internal range liquidity. So this inducement right here, this fake order block, is part of this internal range liquidity right here. So you mark out your true dealing range, right? You see price push down lower, give us a clear liquidity sweep of this old low, then extend higher. First, we get this market structure shift. This shift right here is a signal that price was once in a downtrend, but now we shift in trend to go higher. And then price confirms this market structure shift by giving us a breakup structure of this range high right here. So after we get this breakup structure of this range high, we're no longer in this downtrend format no more. We are now playing inside of this leg, right? This dealing leg, this dealing range is what we call it, right? From here to here. And everything inside is our internal range liquidity low. And near our real point of interest is where the inducement is gonna set up. After this market structure shift, like I stated, the first pullback is usually the inducement, right? The first pullback, I'm gonna repeat that, is usually the inducement. Is there to set up traders too early, right? A lot of people, they're in the trades too early. It's not that you can't catch this trade right here to then extend higher. This is what we'll call our return to order block entry. This is another model, right? Right here, where price returns to order block to then extend higher. This is another model. This right here is the inducement model. It's the safer model, I would say, right? It's way better and way easier to trade, I would say, than this, because not every time price comes back to the order block and extend lower. Not every time it gives you that. But if you see this inducement model, you know that is gonna play out because price right here is inducing early traders. Put it down lower. Tap inside of your real zone, either a order block, IPA, fair value gap. I have videos on all those concepts. Tap inside of the real zone to then start extending higher. And then for the number three is to let price take out that inducement level. This right here confirms that the trap is active. You see that price push down lower and clear this inducement level right here, right? It gave us a liquidity sweep right here. This right here is like, oh, okay, cool. Now the trap activates, right? Now we know that their stop losses, early traders are staking. Now price may replay around in this true move right here to then starts giving me this nice delivery. Look how weak this delivery was, right? Look how weak, right? Price was just choppy going up. This is what we'll call a weak price action delivery. But look how nice. After he takes out the liquidity, boom, plays around, boom, right? This is the delivery you're looking for, right? This is the clean delivery right here. Not this choppiness, this clean delivery. And then for number four is to only trade after price tap inside of the higher time frame point of interest and then give you a market structure shift or a market structure break, right? As you can see right here, you can this right here is just the higher time frame zone. As you can see, on me personally, after price taps inside of my zone, I will scale in on the lower time frame to find me a confirmation entry right here, right? Price induce these this higher time frame zone, tap inside of my higher time frame zone, and then on the lower time frame, I will get either a breaker or just I'm just gonna market execution it, or you can just take it at this higher time frame level. Either if you're like a swing trader or if you're like a day trader, I would say. But me, I'm more of a scalper, so I will scale down to the lower time frame to find me a range, a zone inside of this right here, because now I know the trade is confirmed. For our entry levels, for our entry methods, it's amazing. For our entry methods, it's just lower time frame fair value gaps, or just inversion fair value gaps, breaker blocks after the breakup structure, or just a refined OTE level inside of this point of interest, right? So if we can tap inside of the 0.79, right, and then we scale down, we see like a breaker or a fair value gap or an inversion fair value gap, then we can take that level to then extend higher to come and clear this old high right here. And then for the targets, just like I stated, is the previous swing high or low, or the next obvious liquidity pool, or just a 1 hour / 4 hour, or just an imbalance. So if you don't see like a higher time frame, like an old high like this, but for me, I always target old highs or old lows. I don't know. I never get greedy. I teach my students to never get greedy, because the markets are never too perfect. So you never want to get greedy and want one price to keep going. Take your money and walk. You know what I'm saying? Take your money and walk away, right? Don't get greedy on these markets, because the market is gonna take the money back from you. So if you see that price gives you this clean liquidity high right here, after you catch your trade, take your profits at these old highs and walk away. That right there was a solid trade. Go journal that. You won for the day. Come back the next day and see what price shows you again, right? But with these models right here, there's multiple ways to enter, right? So this right here is just the higher time frame zone entry. On the lower time frame, there's going to be another entry. After we get another breakup structure, you see that price left this fair value gap. What is going to come do? It's going to come back and retest that fair value gap to then continue the trend, right? Continue the trend, because now the trend has confirmed, right? Now, after price taps inside of this higher time frame zone, you get a market structure shift again, right? Just like this right here. Price clears liquidity and give you a market structure shift to then continue higher. After price taps inside of this higher time frame zone, you get another lower time frame market structure shift to then continue higher. So you get more entries here, entries here, entries here, multiple entries until you reach here. So there's no point in getting greedy. No point of having fear of missing out. I have another video on do not FOMO also. Make sure you watch that video. Do not have FOMO also. Make sure you watch that video. But this right here is the first entry. This could be on the lower time frames, you can find another entry. And here also you can find another entry. So there's multiple ways to enter in this right here, right? That's why I really advertise to not have fear of missing out. Don't just throw a random trade and then like expecting it. Like, don't do that, right? You're gonna endure a lot of drawdown, a lot of mental pain. You're gonna hate yourself, when in reality you could just wait for this breakup structure, wait for this retest, place your stop loss at like a candlestick low, and then target old highs, right? Just wait patiently. That's a lot of things that a lot of traders, they don't know about. It's just to just chill, right? Just chill, right? The markets is there. It's not going nowhere, right? It's not going nowhere. Just chill and breathe, right? Just breathe and chill, right? If you're a person, you're in a rush, the market's gonna kill you and it's gonna take your money away from you. Then you're gonna hate trading. That's why I really advertise my students to be patient, to trade with patience, because patience pays, right? Patience pays. That's why the first word is pay, patience, because it's gonna pay you when you patience, right? Because now you're waiting for the proper structure to show. I hope this video so far is providing you a lot of value. Let's hop on the chart so we can go over the live chart examples on how we use the inducement. And now we are on NASDAQ, right? NASDAQ is the only pair that I personally trade, but this strategy works on all markets, right? I get a lot of questions. Does this work on crypto? Does it work on GBP/USD is my other favorite pair, because I used to trade Forex before I started trading futures. So if you trade GU, Euro USD, NZD USD, GJ, it works for all pairs, right? Keep it simple, right? Keep it simple. So, all right, let's get into this right first. Like I stated, we start on the higher time frames, right? Start on higher time frames. Let's start on the weekly, right? I'm gonna zoom out a little bit more. We see that price push down lower and clear these weekly lows and tap inside of this weekly order block right here, right? So this is our higher time frame zone, our higher time frame zone that price is playing inside of, right? This is where this big leg came from, this weekly order block, right? This is where I kind of started my bias for the week that I told my students. So price push down, tap inside of this weekly order block right here. Let's go down to the 4 hour. And now on the 4 hour, right, price push down, respected this old low and give us a failure swing type of model, right? If you know this one right here, this is just a failure swing. This right here is set up for our next point, our mitigation block, right? After the failure swing, we see that price rallies higher and give us a full body breakup structure of this old high right here, right? Boom. After we get this breaker structure, price gives us this mitigation block. This is not a breaker block. A breaker block would have taken liquidity from this old low. A mitigation block respects this old low right here, right? A failure swing. It gives us a failure swing. I have videos on all these type of concepts too. Make sure you watch the free course on the on my YouTube also. It's like an hour long, right? Make sure you watch that video where I go over every concept. Everything I teach is on YouTube for free. So make sure you watch it, right? Make sure you watch it. Don't I'm telling you, man, it's all there. Watch it, study it, get better, man. Get better every day. Get better. And then we see price push down, mitigate our 4-hour mitigation block to then extend higher. So now on the 4-hour, we're kind of done, right? Because it's just too big. I kind of don't trade the 4-hour, so I'm just looking for my zones. And then on the 4-hour, what I had marked up was this other zone right here. We see that price left this old high right here. This is another liquidity high. I usually don't really use too much for my zones. I would say, yeah, I'm just gonna leave it as this dotted, right? This dotted right here. The dotted for me is like liquidity, and then it's supposed to induce, right? So this is a higher time frame inducement. It's supposed to induce this 4-hour order block right here. So this is just higher time frame zones I'm working up, right? I'm working up. So now let's scale down for me personally to the 15, just so I can see exactly the whole big picture. Now in the 15 minutes, we kind of see the whole big picture, right? So for me personally, I start trading around 9, right? I'm gonna just bring these arrays right here, 9 to around 11 or 1 p.m. I won't put 1 p.m. for the whole New York session, right? This is when the whole New York session is like playing around. So I just start marking out my points of liquidity. So we have this old low right here. That's tapped inside of this 4-hour order block, like we stated. This other old low and this Asian low right here, right? This is my trusty Asian range indicator. It's called Range Box by Nephew Sam. I talk about this a lot. It's the only indicator I use. This is it right here, right? I'm gonna close it. But we have our Asian lows right here in prior old lows, right? So now I'm just zooming in, right? This is the 15 minutes time frames, right? I'm zooming in. I'm seeing the recent range. This right here was our Asian range from this old low to this old high right here. So now we're playing inside of this range. But what we need to see first, like I stated, we have to see a liquidity sweep, right? We have to see first a liquidity sweep, because it's the liquidity sweep that's going to set up for our inducement. So what I had told my students was that we either need to see price clear this high and then give us a 15-minute sweep and then form the inducement before we go lower to come and fill in. This right here is what we call a new week opening gap. It's like the fair value gap, right? When price opens up on a Sunday, price leaves this gap in price action, and then this right here is like a draw on liquidity. So I'm gonna put right here draw on liquidity. So since we had this draw on liquidity right here, we know that price is more likely, right? Because this is a gap, right? Why wouldn't price sell lower to fill in this gap? It's not gonna just leave this gap empty. You have to think, right? You have to think when you're trading, right? So it's not just gonna leave this gap, right? So it has to be there. The setup for today is more likely is leaning to sales, right? You're building a narrative, you're building a bias. That's why trading is more about thinking, right? A lot of people, they think trading is just about catching signals. That's why a lot of people will not make it in trading. I have to keep it real, because you have to think for yourself. You have to think, because these are smart people. That's why it's called smart money, right? It's smart money concepts. It's because it's smarter people after you trying to take your money. So you have to think like them. You have to think like how would they think like? How would they act like? Would they drive price higher, right, to clear traders and then drop lower, right? You're building a narrative, building a bias, right? That's what we call building a bias. So right here is 2 ways this can happen, right? This is what I told my students. We can either see price rally higher, clear this Asian high right here, because this is a point of liquidity, and then show us our inducement to then extend lower, or price may even attack old highs right here and tap inside of this higher time frame zone and then give us our inducement, right? Because this is another zone right here, the 15 minutes, 1 hour, or the 4-hour order block. You can either grab it right here, this full range right here. It's still good too, right? It's still good also, because this is also like a 15-minute. I had just minimized it to just the 4-hour order block right here too, right? But it's either way, right? Price can just push down, push up higher, clear this old high, right? Clears this, and then tap inside of the zone to then give us our inducement. Or it can use just the Asian highs right here, right? Because this is another supply level right here. This is another order block, right? Right here. From here to here is another order block, right? Boom. So either one, price may use either one. That's why you have to let price show you its hand before you attack, right? So let's play price and see what it shows us, right, for today. Let me play price a little bit. You see price had rallied higher, right? I'm gonna leave it right here. We see price rallied higher and gave us a 15-minute liquidity sweep. This is perfect right here because on the 1 hour, it was also a 1 hour liquidity sweep. This is a higher time frame liquidity sweep right here, perfectly. So once we get our 15-minute liquidity sweep, what is the second step? The second step, like I stated, is the breakup structure or the market structure shift, whichever one you want to label it, of the prior old lows. We see price push down lower and give us a full body breakup structure of this old low. And I'm looking for this to happen all during the New York session, right? I'm live trading right now, right, with my students. Pretending I'm live trading with my students right now, right? Because that's how it works for me, right? I'm live trading with my students. They see me doing this live, right? I'm marking everything live before it happens. I'm anticipating every move before it happens, right? So we get this breakup structure right here. I'm telling my students, yep, after this breakup structure, I'm just letting price show it its hand, right? We'll show it its hand. Let it play out. Let the model play out, right? Now, what is the next thing we're looking for, right? We're looking for our inducement, right? We're looking for price to pull back, give us a short-term high, and then clear that short-term high to extend lower. That's the inducement, right? So let's play price a little bit more. Boom, right here, right? Let's go down to the 5 minutes to see this inducement better. Perfect. We see after our breakup structure right here, right, all during the New York session, I have my draw on liquidity lows where I'm looking for price to pull into right here. This is my Asian lows right here, my prior old lows, my prior session lows right here. Everything is perfectly aligned. And after my first breakup structure, you can label this market structure shift. I'm gonna put market structure shift for the traders, right? Right? Everybody wanna, okay, cool. I'm gonna put the market structure shift right here. Or for the SMC traders, coach, it's all the same thing, right? It's all the same exact thing. Change the market structure shift, breakup structure, right? Just label it something, right? It's a break of an old low. And on that pullback, this right here, I said, is your first inducement. It's inducing traders, right? It's the first level. Boom, right here. Let's go on down on the 3 minutes. You're gonna see like a sort of order block right here, right? This is an order block. Order block right here. So guess what? A lot of people, they're placing their trades right here. Oh, they're already in the trade probably right here. They're getting wicks, right? They're getting entries. They're attacking the same Asian low like me, right? They're attacking the same Asian low. Stop loss right here, right? Or this draw on liquidity right here. I'm gonna put it all the way down below, right? To fill in the gap completely, right? So a lot of people, they're chilling right now. They're like, okay, cool, I'm in a trade, I'm in a trade, but not knowing, right? Let's go on the 15 minutes time frames, right? What we have right above the 15 minutes time frame, we have our order block right here, right? This is our order block. What this inducement is doing is inducing this order block right here, right? This is the real zone, right? The real move right here. So we want to see price extend higher, clear this inducement, tap inside of this order block to then extend lower. Let's play price and see exactly how this trade played, right? You see price went higher, clears this inducement. Let's go down to the 1 minute. Let's go right here, right? Let me remove this right here. All the early traders, they're crying, right? Don't be in a rush. Don't be in a rush, right? Boom. After this inducement right here gets cleared out, this is where the real move happens, right? The real true move. Let me remove this right here. The real true move. And you might be like, how did you take this trade? You just took it on the inducement? For you personally, it's going to be depending on you, right? It's going to be depending on you. You can either take it right here, right? For me, this is what I call the risk entry, right? The risk entry. You place your stop loss at the 15-minute high, right? This is a clean entry right here, and you're targeting the low right here, right? You can just take it like this. Or for me, I like the confirmation entry. In the confirmation entry, it's just when you get a break of a prior old low that rallied higher inside of your higher time frame zone. So this is my higher time frame zone. Like I stated in the schematic, right? I will scale down to the 1 minute time frames. Like I'm on the 1 minute right now, right? I'm on the 1 minute. But me personally, I'm like a second trader, right? I go down even lower. I go down to the 15 to 30 seconds to catch that sniper entry, right? I like that sniper entry. So for now, right, what we have is this 15-second break low right here perfectly. After we get this 15-second break low, even though you see it on the 1 minute, right, it's a 1 minute wick. On the lower time frames, it's a break right there, right? That's why sometimes I get questions. Can a liquidity sweep be a break? Sometimes, right? Only sometimes when you're in a when you're in a confirmed trade, like right there, like this right here is just a clean displacement on the lower time frame. So this right here is more of a 15-second lower time frame model. So even though on the 1 minute it looks like a liquidity sweep, on the 15-second we got a break of this old low. So after I get this break right here on this retest, right here, perfect. On this retest, I'm gonna pull back right here. Pull back right here. I'm on my now I'm super live with my students, right? I'm right here. I'm telling them, hey, I'm gonna enter my trade right here. Right there. Place my entry, my confirmation, my stop loss at the candlestick highs, all right, and where I target. I'm gonna make this orange so this looks better. Where am I targeting? I'm targeting these old lows right here, the same old lows. But that's why I stated, don't get greedy, right? Like when I'm live with my students, I'm not here to perform. I'm here to take my money and walk away. So I'm targeting this old low first. This could be your first take profit. Really, this old low right here, because you don't know what price is gonna give you, right? So this could be your first take profit. And third, these old range lows like we had over here, right? This Asian low, right? This old not Asian low, but this old London session low right here. And then we have the old Asian low right here, the range low. This could be your other take profit. So we have multiple ways for you to exit, right? Because a lot of people, they don't know how to exit their trades. I'm giving you real live examples right here on how to exit your trades. Know when to exit before you even enter the trade, right? Know where to take your money out, because when you're in a trade, it's gonna happen fast, right? It's gonna happen fast. So know when to enter your trade, exit your trades. But we have our final take profit, this right here, this old low right here, right? This old new week opening gap right here. Perfect. So let's play price and see exactly how this trade ended for us, right? Let's see. We see this is the confirmation entry. What I want to see now is for price to pull back, play around here, right? Because now this is a strong high. A strong high, a break, clears this inducement, rallies higher, confirmation entry, push down lower, second breakup structure, real move from the deliver right here, right? So now I'm not expecting for price to clear this high. That's why my stop loss up here, and I'm attacking below here. Let's play price. See price going lower, mitigate us in, right? We're in the trade right now. Perfect. Now we're just waiting for price to deliver, right? Perfect. Lower, let it play, let it play, let it play, let it play, and then boom, right? Price went lower to come and fill in the gap completely, right? But you may be like, what if I miss this entry, Spec? What if I miss this entry, Spec? What do I do? What do I do? After every breakup structure, right, we got another lower time frame break right here. We gonna get another retest. So this is your second entry. What if I miss this entry also, Spec? What if I miss this one? Another breakup structure. This is another entry right here. What if I miss this entry? I'm late. Another breakup structure. Another entry right here, right? What if I miss this one? What if I miss this one? Another breakup structure. Another one right here, until we reach this right here. So you see we have multiple entries you can enter on the lower time frame. 1, 2, 3, 4, and 5 until we pull out all the way down here. But I wouldn't recommend you hold, right? I'd never recommend none of my students to hold their trades all the way low longer like this. Don't ever do this like this, right? Because you don't know if price may just reverse on you, right? We don't know, right? We're just testing out a bias, testing out a setup. Even though it's perfect and it's clean, you still don't know. You have to play what the market shows you, and you have to respect the price action, right? A lot of people don't respect price action, and guess what? They leave the trade running, and then next you know, price goes all the way back higher, reverse on them. So for me, right here, you take your trade, right here, and then right here, right? But I didn't even let my trade run down lower, right? I let it play lower so I can get the confidence that the trade played it. But me, I took my money right here, right? At the first day profit, I took my money and walk away because that was 3,000, right? How can you not take 3,000 when the market give you free like this? But if I had held it, it would have been over like $16,000, right? Probably even more. But take your cheap profits, right? Take your low-hanging fruit. That's what ICT calls it, the low-hanging fruit, right? Take your low-hanging fruit right here. right? And walk away for the day and have that confidence knowing that the trade played out and you caught this beautiful entry right here using this inducement model. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.